Health insurance, homeowners insurance, auto insurance, we all know about them, right? I mean, generally, if you have a home or if you have a car or if you have an employer, those insurances are certainly some that you have as just part of that, right? You're technically, the state requires you to have auto insurance of some kind. And if you've got a mortgage on your home, the bank's going to require you to have homeowners insurance. And then if you're fortunate enough to work with for an employer, most of them still offer some type of health insurance benefits. So those are kind of all the big three, but there's some others that you may want to consider. And so we thought in this segment of the program, we would talk a little bit more about those other lesser known or lesser used insurance policies. So welcome to Dollars and Cents, where we help you make sense out of all of life's decisions involving your money. We're Central Florida's longest running radio program. Also happen to be one of the top 25 financial planning podcasts on the World Wide Web, with over 10,000 downloads of our podcast at last count. My name is Joel Garris of Nelson Financial Planning. Our team of certified financial fiduciaries stands ready this week to help you change your life by providing a successful plan to provide you with peace of mind for the future. So in terms of some of these other policies, we've got 5 on this list here to help provide you with some perspective on some of the other insurance options that are out there that you may want to consider. And first on that list, and it's not necessarily in any particular order, because I think the last one that I'm going to get to is actually the one that I probably recommend the most to folks visiting with me in the office. The first one, though, is a disability insurance policy. And what that policy does is it typically pays about 60% of earnings if you get sick or injured until traditionally age 65. So if you're still working, making earned income, that type of policy is typically one that is available through your employer as part of the smorgasbord of benefits that they provide, or you may decide to get that policy on your own. What's interesting on that is that depending upon who pays for the policy, it actually determines the tax impact of those benefits. So it's kind of unique when you look at a disability insurance policy as to who's paying for it. If the employer pays for it, then if you do ever collect on that disability policy, then it's going to be taxable income to you. On the other hand, if you pay for it, then it's not taxable. Generally, a disability policy is going to be based on your salary. So if you're high commission, high bonuses, understand that the limitation is based upon your salary. You can have a disability policy that covers your own occupation versus any occupation. Obviously, the distinction there is if you're not able to do your specific occupation that you've been doing, then that policy is going to pay out. If you've got a policy that says any occupation, well, then you may be forced into changing careers in order to satisfy the terms of that disability policy. So it generally depends. The need to have a disability insurance policy depends on a couple of factors that you may want to be thinking about. First of all, if you're retired, really no need to have a disability policy because you don't have earned income. If you are working, then you need to look at your personal savings, your personal accumulation of wealth, and the type of job that you have. Some jobs are much higher risk than others. If you're a roofer or if you're an offshore fisherman, those jobs have a much more significant risk than other types of jobs. Similarly, if you have a very unique job, like you're a surgeon or something like that, then that's typically where you would see those types of policies come into play. So know that though, as with any insurance, there is a cost. But disability insurance, one of those things that you may want to be thinking about if you are still working and you don't have that much saved up for ultimately to be able to replace your income if anything happens. So one of those benefits that's available through your employer traditionally as part of sort of their smorgasbord of benefits. Another one which you do hear probably more about is long-term care. Nursing home, that provides coverage for you if you wind up going into a nursing home or need home assistance. It avoids, what it does is it avoids spending down your assets later on in life. Again, that's the notion of long-term care or nursing home. It's going to apply when you need those services, and traditionally you need those when you are older or towards the end of life. The trade-off, of course, is that's sort of why you save money along the way, is to help pay for things like that. If you're going into a nursing home, chances are you're not still traveling and enjoying all of those types of benefits along the way. So let me just I think we may have. Yep, that's all right. We'll go straight on. Yep. Hey, had a little technical glitch on that one. Of course, we're still doing the show remotely, so if the phone cuts out, then that becomes a problem. So we're back. Thank you for bearing with us on that. So we were talking about long-term care policies. Those are the types of policies that you need to have that would cover long-term care or nursing home. The real issue is twofold in that. Number one, if you've accumulated assets along the way, that should be able to cover that cost. Many people don't think of it that way, but the reality is that you're not traveling, you're not doing the fun stuff of life if you are sitting in a nursing home. The other thing to consider is the cost is really a major factor. Back in the day when a lot of companies were issuing out Cadillac policies, those policies really covered extended periods of time. Some of them covered them without any limitation. Today, traditionally, the coverage you get is only about 3 years, but even that, the cost is high. If you're age 55 and a male, you're going to pay about $1,700 a year. If you're a female, you're going to pay about $2,700 a year. And understand that at 55, you're kind of committing to spending that money over the course of 30 years. So if you're a married couple and want a policy, that's going to be about $4,400 per year for the next 30 years. That's where the cost impact comes into play. And then more often than not, you're only buying a policy with about a 3-year limit. So that one is one of those policies that's certainly out there and available. More often than not, the numbers say perhaps that one doesn't make sense. But for some, it does, and certainly worth at least knowing that it is out there. Similarly, most people do know about life insurance. That's the one that pays if you die. You really need that if someone is relying on your income. There's a difference between whole insurance versus term insurance. Generally, with the same amount of dollars, you can get a lot more insurance coverage with term because it only covers for that certain term period. Most term insurance policies are basically commodities. You can find them online. They're available online anywhere on the various websites that offer term insurance. Remember, when you think about life insurance, don't think of it as an investment. It is not. It is insurance. A lot of people confuse insurance with as being an investment. The reality is it is more of an income replacement tool, not an investment. That's why you have insurance. If something happens to you, if you die, then somebody's going to get paid out a chunk of money that they can then use that money to be able to have a payout from that money if you wind up dying prematurely. Another policy that you may hear a little bit about, renter's policy. That's a policy that obviously if you are a tenant, that helps to cover your property if something happens to it. It also helps to cover living expenses if the property that you're living in, if something happens to it that makes it non-compatible. That typically is available through your auto insurance company. On those types of policies, be aware cash value versus replacement value. The cash value of something is what it's worth now after you've used it. Replacement value is the value to go out and buy it new. There's a big difference between cost value versus replacement value. You want to make sure that you've got replacement value, because cash value, you're not going to wind up with being able to get the same level of stuff. One more point on insurance. As with anything, it is based upon your health. If you smoke, you've got 4 times greater premiums than a non-smoker. So make sure that you really pay attention to the cost. We're going to slide to the break. When we get back, I'm going to talk about the insurance that is probably the one that I recommend the most often to folks in the office. So when we get back, we'll talk about that here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning.